For all verified facts, subscribe to our YouTube channel and click the bell icon to get the latest updates.
Hello and welcome to this Boom Special. I'm Govindraj Ethiraj. The stock markets continue to rise almost unendingly. The Sensex is now up another 316 points and it ended at 43,593, and the Nifty was up 118 points to end at about 12,749. Now this is a 7-day record-breaking run. Now here are the more important figures. If you look at it from 30th October, which is not too very long ago, the markets were at 39,614, and if I were to reverse a little bit, we are now at 43,000. Let's go back a little further to March 23rd, 2020. The markets were at 25,981. So you can see the phenomenal run in the stock markets in India as well as in other parts of the world that we've seen. And therefore, it always calls to question, can this continue? And are we entering that era and area where the air is thin and therefore we are not able to breathe? So to discuss this and find out where this could go and where things stand today, I'm joined by Prakash Diwan, Director of Altamont Capital Management, and Gaurang Shah, Vice President at Geojit Financial Services. Gaurang and Prakash, thank you very much for joining me. So Gaurang, tell us what's going on in the markets.
So, Govind, I think you were just right. 23rd March was the boom day, if you say so. 25,980 odd on the Sensex, 7,600 odd, correct me if I'm wrong, on the Nifty spot. And within a span of 6 months, we have not only recovered the lost ground, but we have actually gone and made an all-time high. So, firstly, I would like to point out the positivity in terms of equity markets being the best asset class in terms of creating return over a longer period of time. If you have invested directly with understanding and a little bit of homework, or if you are not aware about much, understand market much, then using the mutual fund route or SIP route, whatever you may choose it, right. During this time, Govind, what happened is there was too much of pessimism, and post that pessimism, the good news came from Pfizer and BioNTech about the vaccine, 90% viability of it. During this time, we had steps taken by the government with respect to how to control the pandemic and not a large number of people getting infected, which will lead to curing issues, hospitalization, beds, etc. So, and now it's the pandemic trying to easing off, and the new normal, as we call it, coming into the scene. Unlocking is also something that has helped. Right. Along with this, government policies. Just today, Govind, we heard about the production link incentive of approximately 2 lakh odd crores for 10 sectors. What in effect I'm trying to say is that the government is taking the right move, making the right steps, taking decisions, implementing it at the ground level. And during this time, we had not one but one too many steps taken by the government to help the economy revive, both in terms of financial, in terms of consumption, and of course the most important factor that I personally feel, Govind, is the support to the agri sector, because large part of our population depends on the agri sector. Put all this into perspective and the kind of run up that we've seen in the last 1 week, I would not disagree to the fact that we may cool off a little bit, we may consolidate, see a little bit of profit booking given the kind of run up that we've had. But all corrections, Govind, I personally feel is a great time to buy into the market with a little bit of understanding and homework, and get into companies which have proven track records with credibility.
Okay. Prakash, what's your assessment of where we are today, the journey that we've traveled so far quite quickly, and where could we be going?
Yes, Govind, interesting juncture that we are at, from bottoms to new highs in just a span of 7 months. My take on the market is that, markets basically go by 3 vectors or 3 influencing factors. The first is the earnings itself, what companies report as earnings and what is reflected as the EPS growth in bottom lines. The second is the liquidity that chases stocks in the markets. And the third is the narrative or the theme that's evident in the market. Now, what's happened is in these last 6 months, while earnings may have taken time to restore and we don't see the recovery, you and I might go out and still feel a lot of people struggling with jobs, with their businesses, orders, and the Diwali is not the same, things are difficult. But the markets, remember, stock markets are a leading indicator. They discount or they try and anticipate things much before they happen. So there is an anticipation of improvement in the earnings, and that's what the market is capturing. The liquidity flow, the tap opened when the rest of the global economies put in a lot of money into the system as stimulus just to make sure that things start moving back to normal. The slump that they faced, whether it was Europe, whether it was the US, all of that saw a lot of infusion of dollars, and that's something which percolated down into emerging markets, including ours. And the third is that India has weathered the storm much better. We haven't wilted as much as some of the other larger economies have. They've seen second waves and things like that. And as Gaurang was just alluding to, the lot of incentivization that the government has tried putting behind sectors that matter. So I think all these three put together is what the market discounts and brings out, and these new highs is where we are. Having said that, will these new highs keep on kind of furthering the advance that we've seen? Possibly you could. I mean, I wouldn't be surprised if you could probably even see a 13,400, 500 on the Nifty or much higher levels on the Sensex than where we are. But it would not be uninterrupted. It would not be a straight line kind of thing. There will be volatility thanks to global cues, thanks to a lot of news flow that's domestic as well. So all of that put together, the market could give you some more space, but a large part of the recovery in the markets, at least, is already done. So to make money from here on, you would really have to choose very wisely and slightly have a longer term orientation, and not try a quick fix kind of a thing.
Right. So, Gaurang, and I'm going to put this question back to Prakash as well. In January, we were, let's say, around 41,000 in the Sensex, and the economy was at a certain point. Now, the economy today is not at the same level. It has contracted. Now, how is it that the exuberance for the recovery is in some ways more, let's say, or better than the recovery itself?
So, Govind, I think what Prakash mentioned, I absolutely agree with him. Market discounts a lot of things and moves ahead. And extreme pessimism also leads to extreme optimism over a period of time. And if you have a couple of indicators supporting the market sentiment, along with that, the performance of corporate India, if you have to simply reflect upon the quarter gone by, the second quarter gone by, not too far away, and the verbatim that is shared by most of the management post the second quarter earning, that gives you a comfort zone in terms of the future earnings in the third and the fourth quarter coming a shade better, a color better than what they have delivered, and probably with the implementation of the right policies over a stretched out period, maybe the next fiscal and the fiscal after that, the corporate India will definitely try to reap in the benefits that the government has unfolded. So, I definitely agree. There is no linear move in the markets anywhere in the world, whether it is US market, our market, or Chinese market, or any markets. There are two sides of the market. One is you go up, other is you come down. And the wise man in you would definitely tell you that whenever markets correct, those are the great time to buy. But I would also like to request your viewers, don't expect to touch anything and everything in the market and turn it into gold. That's not going to happen. So you need to introspect, you need to be patient, you need to do your homework and look at sectors and companies which throw visibility in terms of growth with great corporate governance.
Right. So, Gaurang, let me quick question on that. So, you talked about managements telling you that things are looking good. And yes, many of the companies which have monopolized, in a manner of speaking, particularly or increasingly so in the last 7-8 months, are in that position to report those better performances. So, is really therefore that the future, the companies or these companies will do differently from the rest of the economy, which will obviously take some time to recover from this massive contraction?
So you were definitely right. Wherever there is labor intensive issue, I think that particular sector, for example, real estate sector, now that may take a little bit of while to come back. You also have something like infrastructure sector that will also take some time to come back because these are all incentive, labor intensive businesses. But where you have, services oriented, for example, banking, especially private sector banks, just only reflecting upon the second quarter earnings that I just spoke a while back, Govind, I think they have done fantastically well. We were all worried about interest on interest issue. We were worried about moratorium. But look at what the numbers have that tell us. So I think services will do well. Along with that, consumption related thing will do well. And of course, your evergreen sectors in spotlight, that is IT and pharma, they will continue to deliver much better numbers.
Okay. Prakash, how do you see, we know that there are companies now who have ducked or managed to stave off the worst in the last 7 or 8 months. So are these companies really the future of the markets, and are the markets these companies now?
Oh yes, so we've had a very polarized market. Even this run up on the Nifty probably has left a lot of portfolios, at suboptimal growth rates. I mean, I come across a lot of queries where people are wondering why the portfolios haven't done well, whereas the Sensex and the Nifty have touched all-time highs again, and that's precisely the reason, Govind. You have this, phase where a lot of companies had a lot of belt tightening measure. In simple terms, they reduced costs, they increased efficiencies, they stopped spending on advertising and promotions. In fact, there was a phase when television and digital media didn't have any advertisement from car companies, FMCG players, a lot of these companies. Now, what that eventually does is that it might see a little bit of a contraction in your top line or the sales growth, but it does make sure that you are profitable in whatever little work you do. And that's what happened to the paint companies. That's what happened to the Nestle's and the Britannias of the world. And this also makes things very difficult for the marginal players, for the smaller players who don't have scale. Now, if they were not able to scale up at the right time in the past, it's going to become very difficult for them to get any new market share. So the big become bigger, and the gap between the larger players or the market leaders and the other subsequent rung players is actually going to widen. So the market will continue to be polarized, and by virtue of that, the 30 companies in the Sensex, the 50 companies of the Nifty will actually outperform or deliver much more than what the smaller names are doing.
Last couple of questions to both of you. Gaurang, is this a bull market, and does it feel like one, and is it one? And secondly, whether it is or it isn't, what are the kind of sectors that you're looking at which you feel will continue to hold in coming months?
Well, despite the headwinds that the global economies had to face, including India, if within a 6 months time period, if we are able to recoup the lost ground and make a new all-time high, I definitely believe that we are in a bull market, Govind. It's only a time perception. If you are in for the short to medium term, you have to really, take a lot of risk and enter the market. But if you are in for the long haul, I think there are going to be plenty of growth opportunities that will come your way. But like I mentioned, you just can't touch anything and everything and expect that to turn into gold. You have to be stock specific. You have to do your homework and do it. And like I mentioned, I think banking, IT, pharma, these are the primary sectors that we are betting on. Consumption, anything to do with consumption, whether it is FMCG, consumer discretionary, consumer durable, that's going to be hogging the spotlight. And along with that, if you have a little bit of risk appetite, then I think metals and cement should also not be ignored.
Right. Okay. Gaurang, I heard you say somewhere that you should stay home and stay invested. Now, people are out of home and emerging out. So, what's your advice to them? And also, are you seeing this as a bull market or something else?
So this definitely is a bull market, and like I mentioned, we both Prakash and myself, we look at fundamentals more, and my sense is that over a longer period of time, you have a stable government making policies, implementing it. You have earnings turning around, and you have lower interest rates, and inflation also should edge a little bit lower with the elbow room. So put all this thing in perspective. I think we are here to stay. We are possible, and like I said, you may have bouts of profit booking, but it's up to you what kind of time horizon you have and for how long you've invested into the market.
Okay, Prakash, last word.
So I don't know whether calling it a bull market is going to make that much life easier in terms of investing going forward, but my sense is the market is priced to perfection, and any disappointment in this so-called recovery as people move out and things don't work out the way we anticipate, and if we were to, let's say, have a semblance of a second wave or whatever, I think the market will probably get disappointed very quickly, and the fall could equally be sharper. So, I just want to sound cautious, not very pessimistic, but next year could probably be the ugly truth coming out on the economy, where things are not as good as what the market is, reacting or discounting it to be. And that means that the market could give you an opportunity to enter at lower levels. So in a bull market, there are these phases of contraction and correction. Wait for that to enter if you have to in a significant way. Otherwise, as Gaurang said, keep on looking out for good stories on a bottom-up or a stock-specific basis and allocate your money. But this is not a one-sided secular trend market that you could just put money anywhere and it'll still make money for you.
Right, and that's always a good note to end on. Gaurang Shah and Prakash Diwan, thank you so much for joining me,
you so
and hope
much.
to see you
Thank you.
soon.
My pleasure. Thanks.